Understanding Proof of Funds, a comprehensive guide. Proof of Funds, POF, is a crucial document that verifies an individual or entity's financial ability to cover a specific transaction. These documents not only confirm that funds are available but also that they are legitimate and accessible, thus minimizing risks for all parties involved. Key takeaways. Definition: Proof of funds refers to documentation demonstrating the liquidity and availability of funds for a particular transaction. Typical formats. Common forms of proof of funds include bank statements, security statements, and custody statements. Common uses. Proof of funds is often required for significant purchases such as real estate, investment opportunities, and loan applications. The importance of proof of funds. When engaging in large transactions, most notably, real estate purchases, sellers and financial institutions often demand proof of funds. This requirement serves multiple purposes. 1. Assurance for sellers. Sellers want to ensure that potential buyers can afford the property and have the financial capability to complete the transaction, including down payments and closing costs. 2. Verification of legitimacy. Proof of funds provides reassurance that the funds are not only available but also legally obtained. Bank statements and official documents from institutions act as verified sources. 3. Transparency. Providing documentation increases transparency between parties, promoting a smoother transaction process. It's worth noting that proof of funds typically must refer to liquid capital, primarily cash. Investments like retirement accounts, mutual funds, or certain assets generally do not qualify. Requirements of proof of funds documentation. When creating or providing a proof of funds document, certain essential information must be clearly indicated, such as bank's name and address, the name and contact information of the issuing financial institution. Official statement format. The document should reflect an official bank statement or similar. Account balances, the current balance of checking and savings accounts, as well as the total available funds. Signature of authorized personnel. A signature from an authorized bank representative is often needed for validation. Date verification. The document must have a date to ensure the information is current and relevant. If funds are spread across multiple accounts, it's often more straightforward to consolidate them into a single account for proof. Securing proof of funds documentation. Given that proof of funds documents contain sensitive financial information, individuals must protect this documentation to prevent identity theft or financial scams. It's crucial to share these documents only with trusted entities after verifying their legitimacy and purpose. Uses of proof of funds documentation. Proof of funds documentation is utilized across a variety of contexts, including 1. Real estate transactions. Buyers must show they possess the necessary funds to complete sales. 2. Investment opportunities. Investors may be required to provide proof of funds to validate their readiness for high-stakes investments. 3. Loan applications. Lenders often request proof of funds to assess a borrower's ability to afford down payments and closing costs. 4. Immigration applications. Proof of financial capability may be needed to demonstrate that applicants can support themselves. 5. Business transactions. Proof of funds documentation can be key when assessing the financial integrity of involved parties during mergers and acquisitions. 6. Auction participation. Participants may also need to exhibit proof of funds to meet bidding requirements. In addition, sectors like franchise opportunities, contract bidding for government projects, and creating trust accounts often stipulate the necessity for proof of funds. Proof of funds versus proof of deposit. It's essential to differentiate between proof of funds and proof of deposit. Proof of deposit verifies that specific funds have been deposited into an account, detailing the source of these deposits. While proof of funds gives an overview of available capital, proof of deposit provides insight into where those funds originated. This distinction is particularly crucial in mortgage applications, where both documents may be required. Types of documents used as proof of funds. Commonly accepted documents include bank statements, most frequently used proof, showing account balances and activity. Investment account statements, documents from financial institutions confirming available investment capital. Balance certificates, issued directly by banks to confirm the balance of funds. Custom letters, official letters from banks affirming account availability. Document freshness and format. While requirements vary, proof of funds documentation is generally expected to be recent. Most lenders or sellers accept documents no older than 90 days, with some requiring documents dated within the last 30 days for critical transactions. As for format, documents should clearly display necessary information: account holder's name, account number, financial institution details, and available balance. Additionally, digital or scanned copies are typically acceptable, provided they are clear and legible. Conclusion: the bottom line. Proof of funds documents are vital in establishing the financial credibility of individuals or entities involved in significant transactions. They assure all parties of the availability and legitimacy of funds, thereby reducing risks. These documents must be recent, properly formatted, and comply with specific requirements set forth by the requesting party. Understanding the nuances of proof of funds can greatly facilitate smoother transactions in many financial landscapes.